The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they were always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the marker's ball.
Well, here it comes. Oh, my goodness. Have you seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 20th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool brought to us by Sun Tzu, The Art of War. Goes like this: appear weak when you are strong, and strong when you are weak. Hey, folks, look what the markets do on a continuous basis. Number 2, if you know the enemy and you know yourself, you need not fear the result of 100 battles. If you know yourself, but not the enemy, for every victory gained, you will also suffer a defeat. And if you know neither the enemy nor yourself, you will succumb in every battle. What does that mean? It means you must know how to identify the bulls and the bears. Number 3, to know your enemy, you must become your enemy. That means we've always got to take a look at each side of the trade out there. We're going to do that today. Number 4, strategy without tactics is the slowest route to victory. Tactics without strategy, well, that is the noise before defeat. And number 5 out here, in the midst of chaos, there is always opportunity. Markets will go in both directions, and therefore, folks, the more that one side of the boat is full, I don't know if that's really the right way to say it, the more opportunity that presents itself when chaos appears. So let's go check out the chaos in the markets. Let's go try to find the battle between the bulls and the bears here. Right now, we've got the Dow futures trading down 49 points. They're trading out at 16,089. S&P futures off 6, trade at 1846. NASDAQ futures down 13, trading at 3661. A Russell 2000 off about 4 points. King dollar on the move out here. Big moves in the currency markets. We're certainly going to take a look at those. We'll take a look at the euro. It is back inside its descending trend line. False break to the upside out there. Goldilocks, it's back 17 bucks. So we'll say right now. Trade out at 13.24. Silver's down 50 cents. It's trading at $20.33. Light sweet crude is back 56 cents. It's trading out at $99. Natural gas down 10 cents out here. So it looks like the A to B equals CD down must be forming out there. We'll take a look at that. A quick peek around the globe out here over in Europe right now. DAX is off 1%, down 90 points. The FTSE's off 1%. It's off 69 bucks out there. Sea of red in Asia last night. We saw the Nikkei trade down 238 points, off 1 6/10%. The Hang Seng off 1 7/10%, off 386, and the Shanghai down 1.5%, down 29 points. Our call number is 877-927-6648. Let's start off. Let's take a look at the metals. We'll go take a look at the currencies here next. If we take a look at Goldilocks today, it is testing. It's traveling below the 200-day exponential moving average. That price point, by the way, the 200-day exponential moving average, 13.31. You're trading at 13.24. Right now, it does look like what gold is going to do is come back and at least test the bottom of the price channel out there. Now, you see the red line. Let me just go ahead and actually, let's scrunch the chart. That is a technical term that us chartists like to use. Every now and then you've got to do a little scrunching. So we're going to scrunch the chart. I'll actually go ahead and draw the channel line in here for gold. Probably really right about, I'm just trying to find about the largest number of co-located opens and closes. So probably right around there. Let me get rid of one of these. Let's get rid of that and that. And let me see if I delete. There's probably one more thing I want to delete off the charts. Let's see. There we go. Okay. So there's the rising price channel, approximate rising price channel inside of gold right here. So we'll see if, in fact, that acts as a support level. Don't know that it will. If we take a look at what the intersection might be taking place right at about that level, here's where we're going to go from the swing point low, December 31st, all the way up to the swing point high on March the 17th, and we'll see that the 0.382 retracement level, which is really not a big deal, right? 0.382 retracement, if that's all that gold does, if it's really setting up the B to a C, if an A to B equals CD, and that's all that it does is a 0.382, we're slightly below that. By the way, the 0.382 retracement is 1311. So that's approximately where we'll see gold hit that rising price channel. If we're to hit it today, it's going to hit it and move down to about the 1302 level. That's my approximation as to where the bottom of the rising price channel is out there. If you're just listening to us on the radio or your mobile device at TFNN.MOBI, remember you catch the archive of this show on Channel 9. And when you get home, you can put the, let's see, I've got the continuous contract up on my screen. I'm just using the session, which is the close from December 30th. That's one of my touch points out here. I'm also using the open from February 3rd out there. That price level is $1,242. So volume-wise so far, we've done, gold's done 91,000 contracts. Yesterday, 157,000. The day before, 154 out there. So that is what Goldilocks is doing. If it breaks through that area, then you can expect a move down to about the 1262-ish range. That is your 0.618 retracement. So close, I'd say today, if we were to see it close below 1302, I would set up a move to about $1,262 out there. Let's go check out silver, see what silver is doing here this morning. Now, silver is testing that consolidation level. It's actually trading just slightly into it as we speak right now. Silver's trading down to $20.36, the top of the consolidation box, right around the, use $20.43, $20.50, right around there. If we take a look at retracements, let's go do that. Now, silver here clearly weaker than gold. If we take a look, and it's below, right now silver's below the 50-day exponential moving average out here, but it really hasn't been tested that much. We saw really 3 tests here over the course of maybe the last 2 weeks. And it did hold out here. Let's, in fact, get rid of those moving averages for the moment. No reason to clutter the screen out here. Let's just take a look at the real active patterns out here. So if we take a look at from swing point low to swing point high, we'd come all the way back to the December 31st low. Inside of silver, that was $18.72. We'll take it all the way up to the high out here on February 24th. What you'll see is that silver's almost made it back to the 0.618 area. $20.04 would be your 0.618 retracement from your ultimate low out here to the high that we most recently saw. What we've seen here thus far is a move down to about $20.14 out here. The problem with regard to this pattern is if, in fact, the silver closes down towards that $20 level, That sets up a move, not just to the .786 area, which would be 1946. It could actually get all the way back down to the bottom of the consolidation box, right around 1872. So we'll take this one step at a time. It would be bullish, should be positive for the ultimate outcome here would be to see gold trade lower, hold that rising price channel, and in intraday see silver also just go ahead and hold the top of this consolidation box out here. That would be a nice little setup there. Might be a nice little setup as we take a look at the metals. That's what's going on in those two commodities. Let's go take a look at light sweet crude here, and we'll finish this off. So light sweet crude trade down at 99.74. Now, what light sweet crude has only been able to do on the move lower here, and that's coming off of the highs, coming off that price relative strength divergent pattern, the high out here from March the 3rd, down to the low that was put in at $97.37. That was out on March the 17th. So if you go from the high to the low, you'll see that the .382 retracement number, $100.37. We saw light sweet crude close out at that level yesterday. Closed out exactly at $100.42. So, and it's trading lower. A close today below 99.53 would be bearish, and then that could really set up an A to B equals CD to the downside here. The bounce yesterday, 192,000 contracts. The day before, 227, going into about 225,000 contracts from March the 11th out there. Why do I say that'd be a big A to B equals CD down? Because if all something could do is a .382 retracement, and then it takes off from there, that'll set up more than a 1-to-1 A to B equals CD to the downside. We'll take things one moment at a time. How about yesterday, the move in bonds? So yesterday, what do we have moving south? We had bonds moving south. And we had the market moving south. We had gold moving. Well, everything was pretty much moving south. And, hey, if you live in the north, were you moving south out there? So, and oftentimes people say, hey, wait a minute here. That's kind of unusual. The correlation would typically be you're fleeing out of bonds. You're going into the market here. Well, yesterday everything was being sold. In fact, maybe what we'll do here during the next segment or two, we'll go test out that theory. I'll put up a chart of the S&P 500. We'll go ahead and throw the 30-year Treasury on the chart. We'll see whether that correlation is really something that would make sense to follow. And if it's a correlation that makes sense, maybe it does. We'll go find out if it really does, right? What would be your expectation? What percentage of the time would you expect that to correlate? Would it be, 90% of the time, 60% of the time? What's the number? I'm just going to ask you to answer that question, because then we'll actually go back and take a look, and I don't know if we'll be able to figure out percentage-wise, but we'll get a pretty decent indication out there. I'll give you some numbers, and we'll see what we see. In any event, right now what we can see is bonds here had formed that nice Gartley buy pattern, that .618 Gartley buy pattern. That was accomplished on March the 7th. We saw a move up to the 134 level. Wide-ranging bar yesterday, coming back to the .618 retracement at 131.29. It does suggest that when you come back into that area with a wide-ranging bar like that, does suggest to move back to the .786 area, which would be about 131.11 out there. Natural gas trading back about a dime, I believe, here this morning. So it is back below the B point of a potential A to B equals CD down. That would take nat gas down to about $3.96. Big move in the marketplace is the queen, and obviously that means the king out there. Right now we can see the queen is back below that 2008 trend line out there. Something to think about. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzaveto's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-markets out here, jumping to the upside, we've got First Solar, FSLR. It's closed out at $69.40, trading up about $1.50 right now, trading out at $70.94 out here. Let me see what if they were out with some numbers. If they are out with numbers, I don't show them. We've got Synta Pharmaceuticals. SNTA is the ticker symbol. It closed at $4.75. It's trading out at $5.55. So percentage-wise, a nice move out there. What is that? About a 20% move inside of that equity. We've got ISO Ray. ISR is the ticker symbol. It closed at $2.55. It's trading out at $3.23 out there. So you got a nice move out in that. You've got Sun Design or Sun Edison. Maybe it's Sun Edison. There you go. SUNE is the ticker symbol. They close at $20.68. They're trading out at $21.30. The downside out here, we got Shire PLC. SHPG is the ticker symbol. They close at $155. They're trading out at $154 right now. I'm sorry, 153.46 is where they're trading at. Walter Energy, WLT is the ticker symbol. They close at 9. Boy, they're getting nailed here. They are trading out at what is this, 774, but maybe there is a public offering. Okay, they're pushing more paper. That's what's behind that move out there. The Nugget direction shares, that is down. It closed at 44.19. It's trading at 43.08 right now. Microsoft or Apple, let's start with Apple. They're trading at 5.30 versus their close of 5.31. No big demolition out there. Microsoft is trading down about 6 cents. Google is, off a quarter out there right now. Intel, 25.02 is what it closed at. It's traded at 24.96. So no big moves to the downside. If you're watching this on Tiger TV, I've got the 120-minute chart out there. We began the show taking a look at the Art of War, some of the great quotations from that book. It is a great book out there. And the Art of War is really what goes on inside each and every day inside the stock market. It can run, but it can't hide. When I say it can't hide, we can easily identify where the bulls and the bears are. We use candle signals for that on the 120-minute chart. If we're looking for where the bulls are trying to defend their territory, was the hammer candle out here. Let me put my crosshair up on the screen. That would make it a little bit easier for me. That came in at 8 o'clock this morning. That says that low out there is an important low. That means during the 10 o'clock session, so we've got another, 34 minutes, 33 minutes or so, the low of that bar, which is 1844.75. That's a key bar here during the market open. So during that 10 o'clock session, will that hold as support? So we know where the bulls are hanging out. That says you've got good support down at that level, or you should have good support down at that level. And you know the expression, and a hammer candle, if you get it closed below it. If you're long, you're wrong. Of course, what does that mean? What that always means is that you take a look at your first target. And where's your first target? Well, if you've been listening, your first target on any trade is always take a look at where that last swing point is, because we're going to use those for anchors to calculate our retracement levels anyway. So that retracement point, if you see it close below that hammer candle at 1844, that does bring into play the bar from about 8 in the evening, and that was on Sunday. That was Sunday the 14th, 15th, 16th, something. No, what day was that? The 16th out there. Today is the 20th, so 4 days ago. I got that figured out. That was the low of 1823.50, the high of that bar 1834. So that would be the expectation as to where price would go ahead and travel to. And that's what's going on inside of the 120-minute chart. So it gives us an idea as to the where the bulls are trying to defend their position. We'll see what kind of cavalry they are bringing out this morning. Of course, that's on the 120-minute chart out here. If we put the daily chart up on the screen, we'll do that. Then I'll go back to the euro. Didn't mean to just kind of leave that out there. Let's go back. Here is the ES Mini. You can see it's got some very strong support, or should have some strong support at that bullish engulfing candle that took place on Sunday. This is the ES Mini on the 17th out there. That is the low on the daily chart, which is 1823.50 out there. If that gives way, well, guess what, boy? If that gives way and you go to take a look at the next swing point, well, where's the next swing point on the daily chart? That's right. Takes you all the way back down to the February 5th level out here inside of the market. So this is going to be an important area. So on the daily chart, it's the 1823.50 range that you want to be paying attention to. We'll see what the bears are able to muster up. We'll be able to see what the bulls are able to muster up, and that's why they can run, but they can't hide. And so we always know where they're hanging out. We always know where there's front lines out there, where there's secondary lines, and that way in the art of war, when it comes to the battle out here, it just makes it easy. And then just simply when you see your line, if you're long, depending on the time frame, if you're long here and you see it close below 1823, guess what? You might want to rethink that strategy if it's on the ES Mini. 877-927-6648. We're going to go see how these markets going to open. Then we'll go back and we'll take a look at the Queen. We'll look at the euro, U.S. dollar. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 25 points, trading out of 16,195. S&P off 2 points, trading at 1858. Composite down 3, trading at 43.03. Russell 2000 off $1.70. Apple up 38 cents. Microsoft up 9 cents. Google up $1.96. Leading the charge here to the upside is Ulta Salon Cosmetics. ULTA is the ticker symbol. I don't see anything behind the move. They're up 3%, up $3. You've got Tesla Motors is up 63 cents. Celgene is up 90 cents. No big movers out here dollar-wise. Comerica Bank, CMA, ticker symbol that. Well, the big mover, I should say, is IsoRay. We talked about that. ISR is the ticker symbol. Let's go check in on ISR. Let's go see what it is doing. Then we'll come back. We'll take a look at the euro US dollar. ISR. Just want to put that up on my screen here before we take a look at this little mover. Oh my goodness. This thing is here's a penny stock. look, this thing has not traded much in the way of volume. 500,000 shares or so on a stock that's trading 78 cents. That's not a big deal. What do these guys do? ISR. Let's go see what these guys do. Just 2 trading sessions ago was at $1. Yesterday it was at $1. Opened at $1.09. It's at 338 out here. So let's go see what these guys actually do. Who's pushing this paper out here? ISR, IsoRay. They develop, manufacture, and sell isotopes-based medical products and devices for treatment of cancer and other malignant diseases. So they may have cured cancer out here. The stock, though, this thing is really, well, let me take this back a bit further out here. Let's go really see what's behind this move out here. So, yeah, big move out here in this equity for sure. Big, wide-ranging bar. So I don't know what the news was behind it out there, but they're having a big morning. In any event, let's go back and take a look at it. It was IsoRay. ISR is the ticker symbol out here. Let's go. Take a look at the euro U.S. dollar. So in the case of the euro, this is kind of interesting here because yesterday what it did, so the euro had broken above that 2008 trend line. That's the black line. So you've got really 2 lines on my screen out here. It's a daily chart we're looking at on my screen. The red diagonal line happens to be the channel line. That means I'm using the bodies, the co-located opens and closes out there. The black line is the trend line out there. And you can... sorry about that. Just multitasking. Not doing a good job of multitasking. Now, price came back yesterday and tested a support area. The support area was the diagonal line. It was the diagonal line, the black line on my chart out here. And it also tested horizontal support because we had... in the past, meaning going back to the trading sessions of October in 2013, nice little bearish engulfing candle that had formed. We saw another bearish engulfing key reversal session on December the 18th, those highs being about 1.3810. We saw another test of that area with a wide-ranging bar on December 27th that was rejected. So that set up a really good line of resistance out there. Now, that resistance was broken with a pretty good wide-ranging bar itself. That was on March the 6th out there, and that should have held a support. Now, the trading session is not over today, right? Trading session is not over. That being said, we'll see. It'll be very important for the euro to close above right around the 138.09 type level out there. And if it can't, well, then what it will do is the euro ought to come back and now test the bottom of this rising price channel. This rising price channel has been established for quite a long period of time as well. This goes back to July 27th, 2012 out here. So the downside limited potential inside of the euro U.S. dollar could just simply be what we almost have kind of connecting here is that price channel line as well as the descending price channel from 2008 and this rising price channel out here from July 24th of 2012. So we know where the bulls and the bears are hanging out. Their lines, their major lines in the sand are out there. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you doing today?
I'm very well, Steve. Thanks for taking the call, sir. I wanted to ask you about the SPY, the S&P.
Yes.
Specifically, I wanted to ask you if you could share what you know about convergence of timing data coming in right here. First, Sunday. Sunday, March 16th was a full moon.
Right.
The S&P futures, Sunday night when they opened on Globex at 6 p.m., they opened lower.
Yes.
Made a low in the first half hour.
Yes.
Literally within 3 hours of the apex of the full moon. That was a bottom. Turned back up. Right here, we're March 20th. Tomorrow, the 21st, is the solar equinox.
Yes.
Furthermore, I do recall Larry Pesavento a couple of weeks ago sharing the idea that right here, either the 21st, 2nd, or 3rd of March is a Pesavento index date. And also about the same time, Larry shared one of his proprietary transit chart formations showing March 21st, right around this equinox, right around the P-index date, a very strong cluster. Does this mean anything to you?
Okay, so now that you gave me a lot to chew on there, so let me see if I miss something, you're going to have to, you'll have to come back. So let's start off with where do we want to start? So first, with regard to the P Index Day, let me do that. Let me open up my newsletter here because it's contained in each of my daily newsletters, all of the P Index dates. So give me a moment just to do that. Yes, we had the full moon come in on over the weekend, and they typically tend to be more bullish biased. But we'll take a look at that. So the next P Index date is this coming Sunday. So is that the date that you mentioned, March 23rd?
That's right.
Yep. Okay. So we got a P Index Day that is on this coming Sunday. So from that standpoint, what is your thinking? Your thinking is that with regard to that P Index Day, that is a low, or how are you? What? I'm trying to understand your question with regard to that, specifically with regard to the P Index Day.
That's an excellent question, Steve. I am not. I repeat, not asking a leading question.
Okay.
All I know is we had a low last Sunday, right at full moon time.
Right.
We bounced strongly, and now we're mucking around.
Yes.
And there just happens to be a confluence of an equinox, which is tomorrow, a P Index date, which is Sunday, and also Larry showed, and I made note of it, but didn't copy it down, a transit chart formation on March 21st that was also highly active. So it just seems as though from a time cycle perspective, right here, Friday into this weekend is a cluster of something. I have no preconceived notions of what the market is likely or ought to do.
Sure.
And that's my question to you. Do you have a speculation is my question.
Well, I guess my speculation would be this: that the more important, so you're asking really astro type of questions, and so or lunar type questions, celestial type questions. So here's what I would throw out to you: the bigger dates. I don't know if Larry covered this or not, so I'll go ahead and cover it here. The bigger dates from a astro aspect time frame are really between April 20th and April 22nd. So I don't know if you covered that, because during that time period, it's what's known as the Grand Cross. Now, between that April 20th and 22nd time frame, it's one of the largest in history. It's one where you've got Pluto, Uranus, Jupiter, and Mars. So they are forming what you'll call the four corners of the Grand Cross. And during that time period, the furthest that any planet is away from what they call exactitude with each of the others is only like a 16-minute arc. Now, from a measurement standpoint, it's like a little bit more than a quarter of 1 degree out there. So all those things are coming together. So the bigger potential, thing that is going up in the sky that's going on right now is really the April 20th to 22nd time frame. Now, that should be, during that time period, should be a significant turn in the marketplace out there. I don't know if it will or it won't. And there's, but I do know that is probably the largest one for us to take a look at. The transit charts that Larry puts together, I don't have the software, and the ephemeris that I have doesn't provide me the opportunity to see those transit charts. Now, on the transit charts, typically he's looking at when things are all on one side of the boat. So if because I don't have access to it, it's impossible for me, obviously, to comment on it. What I have on my screen. So I think that the market will probably make some activity will take place during that April 20th to 22nd time frame. Whether it's a market-driven thing, or it's something else, I can't say. From my standpoint, I would prefer to play the patterns. I like to take a look at the celestial things more as what I've learned is using those more from a timing standpoint, aligning with other patterns that might play out, whether it's a retracement, to a 0.618 area, or whether it's an A to B equals CD that is coming to an end. With regard to the full moons and new moons that are out there, we did have that full moon come in on Sunday, and it marked, at this stage here, it marked a low. I mean, there's no question about it. The market was moving down into it. And, with regard to retracements, just simply if you use that from a timing standpoint, the market wasn't even making a 0.382 retracement out there. So, am I helping you at all, on
Steve, thank you. You always help. You're answering my questions. I wanted to listen to your stream of consciousness on that subject. So yes, I will take away that, in your opinion, April 21st is a key timing, a time cycle event, and right here, right now, at least to your thinking, isn't highly significant. That's all I was asking your opinion on the matter.
Yeah, it isn't. What I'd have to do is, and I've got just so many charts in the. I'm trying to just kind of sift through some of the charts and some of my other work spots here. My recollection is that it really works the same way, John, for me on the P index days, because I've tried to go back and take a look at when we have the P-index days where there's just two planets that are in alignment during the 24-hour period, when there's 3, when there's 15, or when there's 16, just to see if there's some kind of statistical probability correlation out there. And I haven't been able to find one, just other than to be aware of it and to say, hey, is there some other kind of pattern that's completing here, and then maybe it ends up having more relevance. So that's really the best that I can offer you at this moment.
That's good enough, Steve. Thanks so much for your time. I appreciate it.
Hey, you bet. Thanks so much for calling. That was John in Philly out there. And great questions for sure out there. So again, that April 20th to 22nd, something big is potentially supposed to happen. So how do you like that? How you have to really couch that. I can tell you that it is from a celestial standpoint, it is an area to be paying attention to. But trying to set up a trade for it, just be aware that it's out there, and you would trade, the charts of the way they are right now. And and I'd say here, the better patterns would be, so you've got the S&P is down 5 points. I think the better pattern right now to be trading, for example, if I go back to that 120-minute chart, let's go check in on the ES Mini and see what it's doing out here. And so far, the pattern to be focused on and trading on would be the low of that hammer candle that came in at 8 o'clock. So we're, about 13 minutes away during this session here. It doesn't look like, I can't tell you what's going to happen in the next 13 minutes, so we'll just wait to see how it plays out. But what I can say from a trading standpoint, the low of 1844.75 is really key. Now, yesterday's low during the market to sell off, however it interpreted. Really, we don't care how people interpret the comments from Janet Yellen. We just care about what the market interprets and what the buyers and sellers are doing. And so the intraday session on that 120-minute time frame, which took us into the 4 o'clock time frame yesterday, that low is 1842. So 1842 is one critical low. Then you've got the hammer candle from this morning, 1844.75. And I say if in fact you get a close below that 1844.75, what's going to probably be tested is the low of that full moon that John had mentioned that came in on Sunday night. For me, when we take a look at that, the full moon on Sunday night, and just trying to correlate that to the patterns out here, one of my favorite patterns, as you know, is when price is either moving higher or lower, and it's doing that on either more or less relative strength out here. In this case here, we had the ES Mini. Again, this is the June contract that we're taking a look at 4 o'clock in the afternoon, and that was on March 13th. We had the ES Mini trade down to a low of 1834.50, and at the time that it was doing that, it really had pushed that relative strength indicator to a low level out here. We come back from this break, we'll go follow that and tie that into a lunar-type trading strategy, the full moon, and how you could use that then. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow is off 42 points right now. S&P is down 4. So what we're going to do is we're going to go back to that ES Mini chart and try to correlate that to the way that you could, one way to take a look at being able to time a lunar event, such as a full moon or whatever it might be, along with another trading pattern, and how I have determined that it really works the best. And for me, what in everything that I've tried to trade or do in the market, with the exception of one set of lunas, one lunar strategy out there that I can't tell you The reason why it works, I just know I'm not going to go into that right now. What I do want to, so why did I even talk about it? Good question. So let's just do this. Let's pull up the, let me find that chart again here. Let me pull it up. So it's the ES Mini. So if you knew that there was a full moon that was coming on Friday, which John clearly knew, which I clearly knew out here, what I like to use is say, okay, what's the market doing? Is the market moving up or down into it? And then what was so ideal really about Sunday, when you think about it, now look, it's always easier to go back and take a look at a chart out here. Now, I was paying attention to it myself. I ended up going to sleep kind of early. I didn't have my auto trading system. I didn't have it set for, what I do is I have some tools that are set, so it sends me a text message to my cell phone, and I forgot to set that up. I thought I had so. Anyway, look, let's just take a look at what happened in the market. We had the market, which made that little anchor point at 4 p.m. That was on March the 13th. It was the lowest point inside the RSI reading out here. The market actually pushed lower in price into Sunday evening, as John said. The market opens up. It kind of just opened up slightly lower, and then boom, it finally pushed lower into the 7 o'clock. This is a 120-minute chart, so it shows really the 8 o'clock bar out here. But it was about 7 p.m. when I remember seeing the Dow futures, they were down about 70 points or what have you. But what was going on inside the market was making a lower low, but it was doing it on less relative strength. That's not the way that it's supposed to work. Now, just because you see that doesn't mean you take the trade. You've got to have some type of signal. However, knowing that you had a full moon come in there, what's the signal? My opinion is the best signals are the candlesticks, because that is the sign painters of the marketplace. Bulls and bears, they got to show up for work each day. Now, sometimes people show up for work and they have a hangover, so you don't have your full troops out here. But the bottom line is, inside of any stock chart, the sign painters, the bulls and bears, always leave you messages. Well, the message for me really would have come in right here when you formed that bullish engulfing candle at 4 o'clock in the morning. I'm up early. I wasn't up that morning at 4 o'clock. I didn't get up until about 6 or so, which was a little bit late in the game because the market had taken off here, but it really gave you that nice confirming signal. So at 4 o'clock in the morning here, you got a bullish engulfing candle. So if you know that you got a full moon coming in, and you should see a change in trend, and you know that the market was pushing lower, forget about Crimea and everything else that was out there. Just simply trade the patterns, right? Trade what it is that you see out here. If you know the market was pushing lower, but it wasn't real, by meaning that it was pushing lower, but the relative strength, it didn't have the weakness out there, there you go with regard to your trading strategy, in my opinion, in being able to utilize a full moon and a timing signal with regard to the markets. Now, where do the markets move to? As I've pointed out, that what you always want to do is pay attention to, hey, where's that next set of swing points? Well, where the markets actually retrace back to, in this, what we can take a look at it and say right now has been a counter trend rally, as they move right back up here to the swing points. In fact, they move right back up to where we saw a bearish engulfing candle, where we saw the actual bears go ahead and paint a sign. They did it at 8 o'clock in the morning, and they did that on the trading session of March 13th out there. So price stopped right there. How that works, I can just tell you that it does. That's why I can say right now here, what's key, where we know that the battle is going on right now between the bulls and the bears, is the low of this hammer candle that was formed here at 8 o'clock this morning. And that price, again, is $1844.75. So I hope that helps you out with regard to trying to utilize some type of lunar trading strategy along with other signals in the markets. Folks, it is a terrific Thursday. Thanks so much for joining me. Look forward to seeing you tomorrow morning, or maybe in about 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.